Good afternoon, Scott Redler, T3Live. Welcome to today's recap. Now, I hope I don't offend anybody out there, but I have to say that in my experience, I've seen that doctors and lawyers make the worst traders. Okay, they're very, very smart and they're very, very good at what they do, but sometimes people who are very smart, very good at what they do, think that they know best. They think that they could control the market. They think that they know what's right, what's wrong. You know, even traders or hedge fund guys or economists who think that they know how the economy works and what should be happening short term, long term, how it should be affecting the market, always make predictions, always are stubborn. And I hate to say it, like a surgeon, when you're in the operating room, okay, you have to have a team around you, like scalpel, x-ray, x-ray, this, that. No one, you know, they know best, they're in control, and that's what they have to do. Okay, when you're trading the markets, no one's smarter than anyone else. No one can have an opinion on what will solve Europe's problems and what's not. When will, you know, the SH, you know what, hit the fan again? Maybe now it doesn't happen for 6 months. Maybe in 2 years from now, all of these procedures in place are not going to help, and all of a sudden Greece will then have to take the default, and perhaps we do get hit with a Spain or an Italy or some of the other pigs or whatnot. But you know, as a trader and a market participant, you have to have your set of rules. Not thinking you're smart, thinking you know everything. Just a set of rules that you've learned that have worked for you. A set of rules that you can live by, whether it's your discipline, whether it's your approach, whether it's your money management, whether it's your time frame, whether it's knowing what you're good at, knowing what you're bad at, and seeing how the markets react with an objective or without a bias, without saying this can't go up. Why is this happening? You know, how is this happening? It's look what's taking place. And you know, if you look at the chart of the S&P, and I'm going to show you right now, and I'll do a quick little anatomy of what's gone on in the last 3 weeks. You know, you could probably look at the definition in any technical analysis book, and you could see exactly what took place if you take the emotion, you take the bias out of the way. Okay, here is day one. This was the day that we reversed. This was your outside day. This was the day that we traded below the recent range and closed above it, right? This was a day to take notice. That's why I call it that, because I'm not a brain surgeon. I'm not, you know, one of these guys who got a 1600 on their SATs. I actually got like a 1050 and I went to SUNY Albany. But you know, a day to take notice means notice what just happened here, because it could lead to a big change in the overall complexion of the market. Now, after a day to take notice, what I like to see is commitment. You know, are we going to hold higher? Are we going to see participation with sectors? Are we going to see some leadership? Are we going to see some volume? What kind of retracement rules are we going to use? So it's like a process. You know, what came first, the chicken or the egg, whatever it is. You know, day one, and then if you get a follow through on day 4 to day 7, which is the IBD method, which happened. It happened in every indice around the world within the same week or so. Put everything on the side, whether it's the unemployment, whether it's the housing market, whether it's, again, the size of the EFSF, you know, whatever it is that's going on out there. What happened was you had day one, and then you had your follow through. That means we're in a confirmed uptrend. That means you try and stay with the trend. That means you could dip your big toe in the water and try and take more than a one or a day approach. Maybe you take a few week approach. And you know, not every one of these new uptrends lead to huge bull rallies, but none of them have started without one. And if you go back to the chart, you'll see, you know, this was the day one, and you had a few days of power getting you away from this lower level, showing you that it wasn't just, you know, shorts covering on day one because we didn't continue lower. Because if you look over here, you know, you had a day one at this important 1250 level, but it amounted to nothing. This time you had your day one, and then you had 3 days thereafter, and then on that jobs number day, you paused. We didn't break back below the previous low. We didn't pull back on retracement levels to 50% to invalidate the pressure of this move to the upside. We paused briefly, and then we took out this downtrend, a mini downtrend. So if you were looking to short verse this high, or this high, you had a cover. If you were looking to add to macro 2, this was your entry. This was an exciting day. This was a day that you could have added to your macro tier 1 to macro tier 2, or added as a cash flow. Then what happened? Went up to the top end of the range. Everybody was talking about 1220, 1228. That's what this was. So we got there, and then we held. Okay, I know those days were choppy. Those were days that we had to figure out, if you turn to me, the commitment to the move, because we were talking, you're at 1200 or so, and remember we were saying will 1190 hold, and it held. Those down days got bought up in the end of the day, showing that buyers were coming in. So it proved that after a move from about 1075 or 1100 up to 1200, people said, I'm going to be a buyer up here at 1200. They didn't let it go down to 1175 the 50-day. They didn't let it crash down to 1150. It held higher, meaning that if you need to get in this rally, you have to pay up here. If you're still short this rally and you're cost averaging it up, you're not getting a way out. You better figure out another plan. So then if you go back to the chart, you will see then we ignited, right? This was that Friday. We ignited above this 1225, and you had a quick move to what? 1256. So another 25 or so handles. So at that particular point, you had this down day. Remember Tuesday? Tuesday was a day that it was the first time I think I bought the SDSs. It was the first time I wanted a cute little short. But we said, okay, if you didn't want to buy the 1220, 1225 in the breakout, let's see if you could buy the retest. Yes, we outlined the 25% retracement, which would have been the same level, a higher level, also showing extreme demand to this rally because they didn't let it fall apart, they didn't let it trade lower, they didn't let the shorts out, they kept the momentum intact. And that was actually yesterday, and we reversed off that level. So on the close, you had a decision to make. Do you go flat and get out of the way, because you had big news last night, or do you maybe stay the course? There's commitment at every level. Things seem like they're priced in, even if they didn't, no matter what, it feels like if they didn't come up with the conclusion they came up with, whether it was a 60% haircut or a 45, I think it would have been the same outcome today. Shorts were trapped, buyers looking to get in, and however you want to spin it. So last entry today, okay, or yesterday into today, if you take a look. You go back to the chart. This was your breakout, your retest, and then here when we cleared, this area, I know a lot of it happened, overnight. You had your powerful follow through. Not only we paused at the 200-day for, I would say, a little bit, for a New York minute, and then we pressured through it. We went as high as, what is this, 1292. Now, if you look to your left, you'll see, that comes into some significant resistance. A good spot to say, you know what, I could take some off again and let the market prove to me what's going to take place here, because this is definitely an area of resistance. Yes, there's resistance all the way up to 1350, actually, and then you also have here like 1323. So to me, I think this is the first night, or one of the, maybe I was flat 2 other nights that I'm not net long after this huge move. First target again was 1250. We reached it. I wrote the note saying, okay, we hit 1256, low end of my target, a lot faster than I would have thought. You know what? Take some off. Let's see how we retest 1220, but I'll put 90% chance. I wrote 90% chance, not the high of the year, and now today we're at 1292. Now we're in a different spot. I do think at some point we'll probably be able to buy back at the 200-day. So if you sold today, yeah, maybe they extend a little bit higher, but I do think if you take a quick look again, we're going to get a retest at some point, at this area where we'll be able to rebuy back and not have to, chase it up here. And we'll see how everything reacts in that move, or maybe they even hold it, right here. But at this point, risk reward, I'm out. I'm not short. I'm not going out short and saying, even though we probably could open up 6 to 8 handles down tomorrow because we were up, a huge amount today. So that was what I would think would happen, is maybe tomorrow we open down 6 to 8 handles. So as an active trader, we could buy the strongest stocks. But at this point, a lot of people were super duper excited at the end of the day. Super duper excited. Okay? Not the day to be super duper excited unless you maneuvered this move, you traded from the long side, you watched the patterns, you took stocks off, took stocks on, you rotated through, and you made a lot of money in the last month, because there was a lot of money to be made. A lot of money to be lost, okay, but there was also a lot of money to be made if you follow a set of rules that it doesn't take a doctor, a lawyer, or a politician or the president to follow. Just a simple set of technical rules. I could probably write a rule, technicals for toddlers. That's what we should follow, because that's all you need. You need these patterns. Stocks are either actually acting well or they're acting poorly. So technicals for toddlers could probably, people who follow that book could probably make more money in the stock market versus, people who think that they know what's best for the market or know what's best and what's going to happen 6 months to a year from now. Same way with Netflix, the same way with Green Mountain Coffee. These guys were right about their fundamental approach. They knew the what, but you have to figure out the when. And from when the what to the when happens, you could go out of business a lot quicker because it takes the time for the market to realize that, and the market will realize it when it wants to, and it'll tell us because that's what we do. We read the charts. I could go through like 100 charts right now and show you what happened, do the anatomy of the trade, but it's Thursday. It's 4:35, and we've all been studying, trading, doing a ton of things. What I will say is, though, proud of the community, proud of the firm. A lot of people enjoyed this rally. A lot of people are at the highs of their year. No one blew up their accounts the way I've heard across the street, where people are just shorting. As far as people who are taking a portfolio approach, congratulations. A lot stayed with Tier 1 during that whole time and added to Tier 2. And if you were in a macro positions and you did Tier 1 and you added to Tier 2, this would probably be a spot to get back to Tier 1, but stay the course at Tier 1. For everyone out there in America that contributes to a 401k, this is a good day. So it is exciting. You go home, you're like, wow, you can look at your statement online. For someone like my wife who puts 8%, gets matched 8%, and she has a 20-year plan because that's her time frame. I'm happy that we're back up here, and let's see if we could maintain it and really continue forward. We've had a 13-year range, so maybe we can break out if things start to incrementally get a little bit better, which we'll find out as we see more data. And a lot of smart people all day long, they were just like, this is fine for today, but next week we're going to go back lower down, test 1220. Okay, we might. But just because they're pissed and they missed it and they're caught or whatever it is, just take every step at a time, trying to approach the market where you're not revenging it, where you're not thinking that what is best when the market's telling you something different. Because if you have that kind of approach, you're never going to get anywhere, whether it's from the long or the short side. And when sometimes the market's looking at everything half empty, sometimes it's half full, and after that day one to take notice on October 4th, market turned to half full. Whatever reason why, we don't have to figure out the reason why. We just have to look at the what and the how and do it and stay with it and use all of our disciplines along the way. I have to show Goldman Sachs because a lot of people are sending me emails today about it. Had you time, Goldman Sachs, you must be a brain surgeon, which not really. I'm far from it. Here's your day one, right? Day one reversal, downtrend, meaning that if you shorted every time it hit this trend line, you made money, and then, oh my goodness, it changed for the first time. Powerful move. Remember that 98.50? We talked about it so many times. Well, it went to 98.50, broke through, consolidated. Did it fall apart? Did it come back to 90? Did it go down to 75? No. It held very nicely above 98.50, even had a retest. Okay, and then broke out yesterday, ahead of the market, showing you relative strength, and then today had follow through and went even higher than I would have thought. And it's not because I read the balance sheet of Goldman Sachs. It's not because I know that they have some new issues in the pipeline or their bond portfolio is doing well. It's because, you had a downtrend that's been controlling the stock that broke. It pulled in, didn't fall apart. You saw commitment to the move, consolidation. Then you had another pattern that when it broke above, you got paid again. That's all you had to look at. Okay, that's all you had to know is the price patterns and know how to trade it with a size allotment that you can make money with. If you look at the XLF, spoke about that also. Look here, again, everyone was saying the banks, they're going to be a headwind forever, don't touch it forever, and finally, here was your day one. Then same downtrend that Goldman Sachs broke. I've been holding the XLF for almost a week or so, or even more. It broke above into this resistance, came back, held it. Didn't fall apart, didn't break back below 12, didn't go down to 1150, held higher. If you put your retracement rules in from here to here, I bet you a little bit more than 25% because it's been a weaker group. Came back up to resistance, wasn't ready, held higher again, broke through, retested, right? This was resistance, becomes support. The easy rule, don't need to be a brain surgeon, then pow. Now it's right in front of the moving averages, and let's see if it could hold higher and show more commitment. Let's see if it could go sideways and reevaluate so there's commitment and it can go higher again. But this has been a sizable move, not because I know where their loss loan reserves are, not because I know where their write-downs are for different mortgages that they have, not that I know that they're going to charge for ATMs or where the housing market's going, just because it bottomed, broke a downtrend, held higher, stocks held in there, some bad news hit, didn't go down, That means commitment. Now it's at another level. Okay, as far as the OAHs, remember yesterday I was like, this group made a higher high before the spiders. Whether it was via low, whether it was some short covering, whether it's the commodity trade back on with oil. Look how well the OAHs responded today. Okay, pow. This percentage-wise for indices, this was a huge move. Okay, and here again, I know it was a laggard, but it changed on day one. Here you go. Day one, and then it came all the way up real quickly to this downtrend, right? High, lower high, lower high, lower high, and then it wedged. This was your wedge as it held above, showed commitment, and then now extended. Has a little bit more room, but you have to be careful now. But these are great patterns. Day one, moved along. I could do some micro patterns in there, but I'm not. Here was a nice little wedge, and then once it broke this downtrend, it held above it, and now you stretched. Not so bad. Not, again, set of rules, patterns, watch the action, not the headlines. I guess I'm going to be doing this all day because I'm just thinking of all of these. We talked about even how the tech and the retail that were the leaders about 2 weeks ago became the laggards, so they haven't really been on our radar as much. Why? High beta tech's been under a little pressure. Apple still is trying to absorb that earnings miss, I guess. You take a look at Apple. Apple still is kind of in the penalty box. Here's the chart. It did try and break above right away. It didn't do it. Maybe if you're macro tier one, that's fine. Hopefully we get some kind of momentum trade through this gap to fill it. Because look at IBM. IBM I spoke about today with Jill. Nice trade there. IBM held this uptrend, right? Held along, low, higher low, higher low, higher low, higher low. So what would have happened if it broke this? The trend would have changed yesterday, but it didn't. It tested it. Buyers came in. And then what did it do today? Broke above this previous high, squeezed a short, negated the earnings gap. And now I'm sure with a matter of time, could be by the end of the year, you're going to see new highs. And this has been a great investment vehicle to show that you could be a stock picker and be involved in something besides just cash flow trading it. But obviously, you look at the patterns, you could always add cash flow. Lots of different retail stocks have acted well. Lots of different ags have acted well. I'm not going to go over all. Even like GE. GE, people are like, oh my goodness, you just made 6% in a day in GE. You're lucky to make that in the course of a year. It was a price. It wasn't because I was looking at whether it was an industrial, whether it was a financial, whether what the dividend was, or I just figured, little common sense. Market's holding in well. It's broadening out. Nice tight pattern. Broke above a level. Holding in here. Let's get involved in some GE because money managers are going to chase it. They're going to have to buy GE. It's a name you know, whatever. Look at GE today. It was on off the charts yesterday. This is what I drew this morning. This was the reversal. Brought it back above the range. Quick move actually above the range and then held. This was the downtrend that if you were shorting it against, short, 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 it always pulled in. What did it do here? This time it didn't. Held sideways, constricted. What do we like when things constrict? They're ready to expand again. And there you go. GE closed at 1737, up over 5% today. I trade this 3 times a year. I probably won't trade this again. Bought it yesterday, added today, sold it into the close. That's the beauty of the job. Sometimes it's that easy. It doesn't happen all the time. And people go, oh, that was lucky. It really wasn't lucky. It was, it was opportunity. And opportunity meets preparation and a plan. Or I think it's some other, something like that. But anyway, it was a good pattern. And if you do the right thing, over the course of your career, you'll get paid because these patterns predict some kind of movement, and usually they work out. Same way, you on a blackjack, you get 11 versus 6. You always got to double down. Sometimes it doesn't work out, but you do that, 20 times, you're probably going to make good money 16 times. And the best thing about it is, when you're trading, you could just wait for those patterns. You don't have to play the 5 against the 5. You don't have to play, when you have a 4 versus a face card. Those are the times when it's tough. Those are the times when you get that hand and you're like, I don't really want that hand. As a trader, you don't have to play those hands. Like right now, it's a tough hand. This is a very tough hand. You go back to the SPX. Will this be the high of the year? I'm not sure. I don't think so. I'm not going to say like I did last time when we came in that there was a 90% chance that this isn't the high of the year. I would say maybe there's a 40% chance, or I would say not a 60% chance that this isn't the high of the year. I'm sure we push up a little bit more. But what's going to happen first? Are we going to pull back and test this, or are we going to go sideways? So at this point, it's a very tough trade. Tough long, tough short. But if you're in it and you know your time frame, you could probably withstand a little bit of a pull-in. if you're an active trader and you don't want to sit through and you could time it and you're in front of your computer all day long, you could probably have lightened up today and you'll get a better entry within the course of the next week. Could go higher first, but I think there's going to be a better spot to buy. I'm not saying it's going to be like a 0.382% retracement or whatever, but you're probably going to get a test of this area that we just showed you. As far as something like, what else is going on here? Amazon, still weak. Good little trade to the 200-day. We'll see if there's some kind of strategy here where it goes sideways and tries to get into this gap. But Netflix, we tried to do it and it worked overnight, and then no traction. So these are like broken stocks for now. If you take a look here at Netflix, you'll see it's kind of inching up, but this isn't really where the action is. It's too dangerous. This is nothing compared to some calculated patterns like we've seen. Let's see what VLO did today. VLO gave you a nice second day, nice pattern. Okay. What else did we go over? What did Cummings do today? CMI. Look at that. That's also a nice pattern, nice strategy. You had earnings come out, right? Earnings came out and it sold down. I was on with Stephanie. But what they do, didn't fall apart, didn't break support, didn't say, oh, screw those earnings, they're horrible, let's be done with the stock. It bought it right here. So right now it basically gave it a pass and said, I'm going to buy Cummings right here, close strong, and now look where it is. If it wouldn't have closed green this day and it wouldn't have filled this gap, showing that people wanted the stock at a discount because this is where it was when it closed, so this was a discounted price 2 days later, you probably wouldn't have had this result. Same way, if Apple would have filled its gap right away, it would have been back on plan. But right now it's still not filling the gap, so people still aren't sure whether or not this is a discount because no one was able to get these prices. So still an eye on top, but it looks to me as if we're going to be powering through this, hopefully soon, and hopefully it'll be a setup that we have where we could take some size, it'll show relative strength versus the market, and we can feel comfortable holding it for that time period besides just being an investor, if that's what you are. As far as gold, nice move off that lower level, pretty impressive. We talked about it being a good trade here into here, and it actually continued today. It's getting above this gap. I think the next stop could be right into here. So if you're trying to actively manage it, if you're in tier 1, stay tier 1. If you have more than a tier 1, congratulations. But I would be selling it right into this gap fill. I think you have a little bit more room, fills the gap into this prior congestion. That would be a resistance area. As far as what JP Morgan. Nice move, JP. Same type of pattern, day 1, little downtrend, broke above it, held above it, even with those earnings that everyone thought were discouraging, and now look at it, coming right into that moving average. Let's take, what's the Moo doing? Wow, that's an impressive move also. Quick, straight from the lows, same day 1 as everything else, right? Came up quick, no pulling really. And then it tried to relax here, right, or pause, and not much of a pause here from below 40 to almost 49. If you plug in your little retracement rule here to see if there could be any kind of continuation, you had from right here all the way to just say here, and what did it do? It pulled in not even 25%, the same 25% retracement rule, and then started to go again, showing you momentum. So after a move from 40 to to this little peak, little upper consolidation, they didn't let it fall apart, showing you can get continuation to this trade. And now we're up into this resistance, and we'll have to figure it out from here. But I wouldn't be chasing and initiating a new position up here. That's why it's a bit tricky now, because things can go, and they can go without you. But if you're okay with where you sell it, it's fine. You can book profits. It's fine. I'm the biggest culprit of that I'm usually in too early and I'm out early, and then it continues, and I'm like, oh, I should have been able to have the wherewithal to hold the same size I had on the first few days, because on the last few days I'm always a lot smaller. But that's me. I don't take them all the way to the end of the dance. I take them to the dance, I spin them around a few times, and then I pass them off, until they get tired. I don't know, that was a pretty dumb analogy. Anyway, I'm getting a little tired. It's been a long week. A lot to be optimistic about if you caught the last month move, or a lot to be optimistic about if you have a long-term potential 401k that you've been investing in. You have a lot to look forward to if you just are learning how to maneuver the market based on your time frame, because everyone's time frame and risk tolerance is different. As far as T3Live, it's been an exciting week. We've had a lot of different guests. What do we have? It was Taylor on Monday, Deb on Tuesday, Stephanie Wednesday, Jill on Thursday. Got Red Dogs Angels, right? I got 4 different girls in the course of a week, and I'm a married man. That doesn't make anyway. It's only the morning call, but it's good to have a ride, at least for the morning call. All bringing what's important is a different perspective for all of you. You know, we're all active cash flow traders trying to maneuver the markets, and they all are analysts, specialists, and they have all just say skill sets that they've learned through the years, and I bring them on so they could add value and show you guys different dimensions, different ways to look at the market, different ways to potentially hold. So this way, no one's a one-trick pony, because you have to evolve, and we're all trying to evolve. We're all trying to make more money from the actual market versus just creating that cash flow, and it's a work in progress, and I think it's working. We're getting a lot of great emails out there from people who've been tracking us that want to be involved, and the better the community is and the stronger we get, the better it will be for everyone involved, because again, people were laughing. We hit our highs, I think, on the chat room as far as that many people in it, and 1,000 eyeballs are better than 2 at home. If you're at home, you now have 1,000 eyeballs watching, helping out, giving you color, giving you sometimes good advice, bad advice, but just pointing things out that you wouldn't see, whether it's news, whether it's levels, whether it's volume, whatever it is. Everyone's trying to put input to make other people successful, and that's why the community is going to continue to grow, and I'll continue to babble. So go out. It's Thursday night. Bring a raincoat. It's a little drizzly on the East Coast. Hopefully it's a little bit nicer wherever you're watching this, and I will see you tomorrow at the morning call. It'll be a relaxed morning call around 8:45, 9 o'clock. See you then. Have a good night.